There are a ton of ups and downs in real estate. It can truly be such a roller coaster of an industry. And I gotta say, experiencing the fun and exciting milestones and achievements with your clients is awesome. So whether that's a home buyer that's finally been able to get an offer accepted, or a home seller that's been able to sell their home for top dollar, those moments feel incredible. But there are also a lot of moments, especially in these past 2.5 years, where you're having to deal with frustrations and disappointments, especially if you are or are working with a home buyer.
We've thought about it, we've prayed about it. This is our dream home. So we're gonna offer 10K over asking. I'd love you to tell the homeowners.
Actually, someone's dad just came in and offered 100 grand over the asking price, all in cash. They backed up a literal money truck.
These past couple years have provided almost no relief for buyers. It really has been a very tough market in most parts of the country, especially if you are looking in desirable locations where everybody wants to be. It has been very, very tough competition, and we've been in need of some serious relief for buyers for quite a while now. With interest rates ticking up quite a bit recently, it's gotten a lot of people asking the question of, will we finally see a correction in the housing market, or maybe even a recession? Now, granted, people have been asking this question a lot for the past couple of years, especially last year. I think this question has been on a lot of people's minds, especially if you are actively looking to buy or sell a home. But the rising interest rates have really served as a catalyst to get people talking about this more and more. Let's break down a few recent articles and see what the news has been saying lately in regards to a potential housing market crash. Hey everyone, welcome back to the channel. If you're new here, my name is Irina. I'm a real estate agent in Oregon, and here on my channel we cover a variety of topics, especially in regards to housing. I love to talk about prefab tiny homes, recent developments in the housing market, as well as just the workforce and the economy at large. I also do love to share vlogs that document my experience as a real estate agent. So if any of that sounds interesting to you, definitely be sure to subscribe and turn on your bell notifications so that you never miss a future upload. So one of the questions that I get asked most often as a real estate agent is the housing market going to crash? And this question has so much weight to it. There's a lot of pressure when answering this question, I feel, even if you are asking a real estate professional, because it's tough to predict these trends definitively. Nobody has a crystal ball. Nobody can say for sure, hey, this is going to happen, right? So it's tough to give a black and white answer to this. But like I said in the introduction of this video, with interest rates going up, it's having a lot of people wonder, is this the catalyst that we needed in order to create some sort of a leveling out? And of course, that's exactly what the Fed is trying to do by raising rates so quickly. They are trying to do something to regulate this crazy market. When they brought the interest rate down drastically in 2020, what they did was they created a bunch of artificial demand. People probably wouldn't have gone and started buying houses during a pandemic, right? But with the interest rates coming down so much, people were thinking, okay, money is so cheap to borrow right now, I might as well go and buy a house. Now, with the interest rates going up, they are trying to tone that down a little bit because, as you know, if you have seen any news or even been a home buyer or a home seller recently, the housing market is completely on fire.
It's madness.
So with interest rates going up, we are bound to see some changes. And what I wanted to do today is talk to you guys about a few interesting articles that I recently saw that have really got me thinking a lot about the future of the housing market and what it's going to look like for the rest of this year and even in a couple years to come. Naturally, a lot of people are going to compare what's going on now to the Great Recession in 2007 because, of course, housing suffered greatly during that time, and right now we are seeing a major frenzy. So a lot of people that I talk to are drawing parallels between the two.
It was the worst financial crisis in the U.S. since the Great Depression, leaving an impact on homes and businesses in America and around the world.
So that's why when I saw this article from CNBC, I thought we had to talk about it, because the title says, home affordability is at 2007 bubble levels, but crash is unlikely. So in this article, Blackstone, which is a huge Wall Street firm that essentially invests money on behalf of large institutions, they've recently come out saying that though housing affordability right now is mirroring housing affordability during the Great Recession in 2007, They don't think that this is a signal of another housing bubble, and they cite a few interesting reasons as to why they have made this assertion. They're saying that there's one major difference between then and now. Most owners aren't using their homes like an ATM today. So basically they said that the value of what people owed for their homes back then was greater than the actual value of their homes. So they owed a ton of money on these houses that they were buying, but these homes weren't actually worth that much. Home equity right now, in contrast to that period of time, is at an all-time high. Another important point to make is that there has been no drop in credit or lending standards right now. In 2007, 2008, that time period during the Great Recession was well known for completely lax lending standards, and that is how so many people were able to obtain not one, not two, but even multiple properties. They had multiple mortgages, and they were paying a ton of money for these homes, but they simply weren't qualified to even take out these mortgages. But lenders were handing them out. Right now, there has not been a drop in credit or lending standards. The criteria to qualify for a mortgage right now is definitely not comparable to the criteria, or lack thereof, during the Great Recession. There is also no overbuilding right now, and this article cites that no excess in housing means less risk. In this article, Blackstone also states that housing is more correlated to labor markets than it is to interest rates, which was a very interesting point. They basically stated that if the labor market remains stable and strong, housing should too, which is definitely an interesting point. I'd love to hear what you guys think about that in the comments down below. But again, we can't assume that the labor market will always be as strong as it is now. Something has to give. But I guess the question is it just going to be a correction or an actual recession? The article ends by saying you might see home prices generally flatten out. You may have pockets of weakness where home prices in some regions might fall, but the idea of having a national and prolonged drop in housing as the economy eventually rolls over, I think, is still a relatively low probability. I feel like that quote is really the sentiment that you may be seeing from a lot of real estate professionals right now, and a lot of mortgage professionals as well. But I'd love to hear what you think in the comments down below. Do you think that a prolonged drop in housing, as this article says, is unlikely to happen, that there's a low probability of that, or is it imminent? What's interesting though is that this article came out at pretty much the same time that another CNBC article was released titled "Homebuilder Sentiment Falls to Two-Year Low on Declining Demand and Rising Costs." This article states that homebuilder sentiment fell sharply in May as mortgage rates shot higher and material costs continued to rise as well. This is actually the 5th straight month that homebuilder sentiment has been declining. In one of my previous videos where I talked about interest rates going up, that was towards the beginning of this year, I talked about how new construction might not be the best idea this year, especially if you're purchasing a home that is projected to be completed like in the fall or winter, because that gives you ample of time to wait for the interest rates to go up. Right? So if you qualify for a loan right now with today's interest rate, in September, you may not necessarily qualify for that same loan because now the interest rate has gone up, meaning that your monthly payment has gone up, meaning that you may not be able to afford that new monthly payment. Now, I say all of this to say that home builders are likely experiencing a lot of cancellations right now as interest rates are increasing. A lot of buyers that may have qualified at the 4.8% interest rate are not necessarily qualifying at the 5.4% interest rate that we're seeing right now. The article says buyers in April saw the average rate on the 30-year fixed mortgage jump from 4.8% to 5.4% and then hit a high of 5.6% in the first week of May. The rate started this year at just 3.29%. So that's quite a big jump. At the same time, builders saw inflation hit their costs hard. Builders really have it tough right now. With buyers potentially canceling on their contracts, builders are also having to deal with increased prices in order to obtain material. Inflation is for real, you guys. If you're seeing it in the grocery store, I guarantee you builders are seeing it with their material costs. The article also says the housing market is facing growing challenges. Building material costs are up 19% from a year ago, and in less than 3 months, mortgage rates have surged to a 12-year high. Based on current affordability conditions, less than 50% of new and existing home sales are affordable for a typical family. What's happening is entry-level buyers are simply being priced out and new construction contracts are being canceled at a higher rate than they were before. Now, aside from that, as a lot of people have been noticing that sellers are dropping prices lately, it's gotten them asking if the housing market is finally starting to slow down. So when I saw this article from Yahoo Finance titled, "As more sellers drop prices, is the housing market finally slowing down?" I thought it would be another really interesting one to take a look at with you guys, because this has gotten a lot of people wondering if sellers are finally going to be receiving actually, reasonable offers for their homes rather than offers that go 20, 30, 40, sometimes even $100,000 above asking price. Is this a sign that relief for home buyers has finally arrived? The article pretty much starts off by saying that the real estate market has been pretty crazy for the last few years, and a lot of buyers are crossing their fingers for a slowdown. But the thing is, that slowdown is likely only going to happen with rising interest rates. So it's kind of a catch-22. On one hand, as a buyer, you definitely want decreased competition and decreased demand so that you don't have to be competing in all of these bidding wars in order to finally get your offer accepted. But on the other hand, 2021's interest rates of 2.9%, or maybe we were in the early 3s at certain parts of the year, those interest rates are gone. We're not going to be seeing those rates anytime soon. What this article also says is that 2022 was the housing market's hottest March ever, but 12% of homes had a price drop during the 4 weeks up to April 3rd, most likely due to those increased interest rates. I think these price drops are also happening because a lot of sellers may have been listing their homes at unreasonable prices because they're thinking, hey, it's a seller's market, I can sell my house for whatever price I want, which isn't necessarily the case, especially as interest rates are going up. So I think these price drops are really happening as sellers sort of come to the realization that they need to price their home at fair market value. The article then goes on to say that things will not drastically change overnight. They interviewed a few real estate agents to really give their thoughts on what they're thinking will happen with the housing market in the future. And this isn't necessarily a crazy thought. A lot of people are well aware that the real estate market doesn't just crash overnight. But in the article, these agents are really reiterating that it's going to be a lot of gradual changes before we see a truly leveled out market. The article says that eventually rising interest rates will spark a change, but it's not likely to cause a rapid reduction in prices. The first stage will be, instead of getting 10 offers on a home, there will only be 3. The home won't necessarily sell for $75,000 over asking price, but rather something closer to maybe $25,000 over asking price. So a lot of these gradual changes are needed before we actually see major change. Now, with all of that being said, again, real estate is hyper local. Just because there is a trend going on nationwide doesn't mean that you're not going to see different statistics within your particular city or even within your particular zip code. Now, I would love to hear your thoughts in the comments down below. Do you think that we are headed for a recession or a crash? Or are we just going to experience a correction and a series of gradual changes? Let me know what you think. There are a lot of articles and a lot of content creators stating their opinions on the housing market. It really is a hot topic right now, but I would love to hear what you think, what you have experienced in the past, and how those experiences are influencing what you believe to be true about today's housing market. All of your thoughts and opinions, I would love to hear them in the comments down below. If you'd like to see more housing market videos like this one, where I go over articles with you guys and we just sort of talk about what the news has been looking like lately, let me know in the comments as well, because I do want to make sure that I'm making videos that are interesting to you. If you'd like to see more of my life behind the scenes, definitely follow me over on Instagram at Irina D. And of course, you guys know that I am a real estate agent in the state of Oregon. If you have any home buying, selling, or investing needs, all of my contact information is in the description box down below. I'd love to hear from you and help you achieve your home goals. Other than that, I will see you next week for a brand new video. Bye!